Many people start business with passion, big dream, and the excitement there is, but few people pay attention to the structure behind the business. But the truth is, your business structure can affect your taxes, your personal liability, and even your growth potential of your business. So before you register that business name, there is one question to answer. Should you register the business as a sole proprietorship or a limited liability company? My name is Paul Adulemensa, a chartered accountant and a business consultant. Let's delve in. So some of the key features are, for sole proprietorship, it is easy to establish. The setup is very easy to establish. Whilst for limited liability company, it is a bit difficult compared to the sole proprietorship with regard to the registration, the processes, documentations. It's a bit complex, and the cost involved in the setup is also low with the sole proprietorship, but with the company it involves a higher cost. One key feature is the limited protection. So for sole proprietorship, you are at risk if there is any risk to your business. Your assets, the individual's personal assets, can be used to defray the cost or the loss. But with limited liability company, if there is a loss, the loss is limited to the assets of the company, not your personal assets. A loss cannot be used to defray your personal building or your house. But with sole proprietorship, a loss of such can go on to affect your personal assets. And mostly, limited liability companies are very credible compared to sole proprietorship. So in assessing loans, it is easy for limited liability companies to assess loans compared to an individual or one-man business assessing credit for its business. People do trust in companies compared to the trust they put in individuals. So it gives individuals trust to give out loans, to invest in it, and also to conduct business, to have business with them. Indications that one should run a sole proprietorship instead of a limited liability company. That when you want a simple structure, or you do not have enough capital, you do not have enough funds, it is better for you to have a sole proprietorship. And if you are just testing an idea, the business you do want to run, you are in the testing phase, you want to test an idea, then it is better to test it as a sole proprietor. And when business booms or when business gets better, then you can scale it up to a limited liability company. For limited liability company, it is better if you are earning a lot in revenue. It is better to register as a limited liability company because it will save you taxes. Because the higher you earn with the sole proprietorship, the more taxes you do pay. So in this case, you save yourself some taxes. And if you do have personal properties or you do own properties, establishing a limited liability company protects your personal assets, and the business assets is separated from yours. So if there is any liability, it affects just the business assets, not your personal assets. So if you find yourself in this situation, it will be the best for you to have a limited liability company. If you do not have enough capital to put structures in place and hire consultants or hire people to carry out the legal regulatory requirement of a limited liability company, then sole proprietor will be the best. Because for a limited liability company, you have to submit annual reports, shareholders, will require it. So it will cost you to have this work done compared to sole proprietorship, where it is not a requirement to submit an annual report to an authority. Not sure which business structure is right for you? Let's simplify it together. Send a message and let's guide you with business registration, structure, bookkeeping, and tax. Build your business the right way from the start.